Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
So it looks like we got tomorrow's appointment squared away. You got any questions?
No, looks good.
Okay, before I go though, I got to give you this. Check this article out.
What do you got?
Okay, you know how all these years have been bashed by folks on Wall Street for selling annuities?
Of course.
Okay, look at what they're now saying. They've gone from hating annuities to loving them, and look at the main key point there. You see that where it says guaranteed lifetime income?
So all these years you've been talking about mailbox money, Wall Street finally agrees with you.
Oh yeah.
Welcome to the only show in the country dedicated to helping savers worry less about money, the WorryFree Retirement, with your host, nationally recognized retirement specialist and six-time author and fiduciary, Tony Walker.
Well, welcome, folks, to the WorryFree Retirement. And yes, I am that little man in the sweater vest, retirement planning specialist and full-time fiduciary, Tony Walker. And before we get into today's subject, which is a dandy, let me, as always, introduce in the WorryFree production studios on this July 9th, 2024, America's favorite financial sidekick, Mr. Aaron. Wait a minute. Derek, where's Aaron?
Oh, it's actually Aaron's birthday today, so he's out on vacation. Happy birthday, Aaron.
No, whatever. Okay, but welcome to the show. Okay. Over the past 40 years, I've done a lot of reading on the subject of finance, but I've also spent many an hour reading books on marketing and helping clients get what they want. And of all those books I've read over all those years, one of my favorites is a book by Harry Beckwith called Selling the Invisible, where Mr. Beckwith makes an interesting observation about companies that wish to grow while going against the grain of popular opinion on how to do it. He says to go where they ain't. Now, let me explain. You see, after the tragic events of 9/11 and the subsequent 3-year drought in the stock market, which actually began 1 year prior to 9/11, I followed a gut feeling of what I thought was going to happen to savers when those savers hit retirement age, and became very concerned that Wall Street and the products I was selling at the time through Wall Street could not provide a guaranteed lifetime income of the likes that my granddad's pension once offered when he retired in 1978 from Bell South. Income he called mailbox money. You see, although the market went down in 2008 and also went down those 3 years preceding and through 9/11, basically the stock market was a disaster. In fact, in 2008, it lost over 50% in value. But why did most savers in those days not really freak out in terms of what the stock market was doing in terms of losses? Because at that time, the majority of savers were still in their working years. They were younger and they had time for that stock market to come back. In other words, while it was painful to watch their 401k plans become 201k plans, since they were still working and would not be retiring for several years, they did what they were told to do and just hang in there and wait for the stock market to come back, which it always does. Yet, knowing and showing the things we do with the 3 halves of life, you'll notice that in halftime, that's 10 to 20 years later, I became very concerned that when they did reach retirement, and assuming the stock market would take another tumble again if history repeats itself, then these folks would be scared to death and have that ultimate fear of one day running out of money in retirement. So I took Mr. Beckwith's advice and decided to take my practice where they ain't and started meeting people at seminars and on TV and offering these products to provide security and lifetime income called annuities. Now, annuities are the only, let me repeat, they are the only product that can guarantee that savers will not run out of money in retirement, period. So on the one hand, you had Wall Street, who for years constantly telling savers how much they hated annuities, and you should too. But now, and we're going to find this out today, all of a sudden doing a 180 and telling savers how much they love annuities and why you should have this sudden conversion of opinion to love annuities as well. So what happened? And how did I know some 20 years ago that these products, referred to as annuities, would be so popular in the retirement planning field today? Well, when I return, we're going to dissect an interesting article as to recent groundbreaking research on annuities and the real reason Wall Street has changed their tune. So, speaking of tune, you stay tuned. I'm Tony Walker. We'll be right back. Having worked in the retirement planning field for 40 years, I know it's not just about how much money you've saved for retirement, but making sure you one day don't run out of money. That's where mailbox money comes in.
Mailbox money!
A reliable, lifelong income, much like the pension plans from the past. If you're interested in turning your 401k into mailbox money, let's talk. Just set up your free 10-minute phone call with myself at TonyWalkerFinancial.com. That's TonyWalkerFinancial.com. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no-obligation appointment. Let us help you today. Some 20 years ago, after watching the stock market crater for 3 straight years and seeing my clients' money I had invested in the stock market crater as well, I decided to take the advice of Henry Beckwith and go where they ain't. And the place at that time where most advisors were not is in the space of offering annuities, which are basically contracts that will provide savers a guaranteed income in retirement that they can never outlive. Problem was, back in those days, although I was convinced these products were the way to go, the rest of the financial world did not agree. In fact, they came right out and told savers how much they hated annuities. Nevertheless, I kept my hand to the plow by creating software to help explain how these products could be incorporated inside a written game plan with other financial products to assure that the saver could not only enjoy their money, but also make sure that they didn't one day run out of money. Well, as you can imagine, after being raked over the coals by much of the competition for believing this truth and watching it play out, lo and behold, guess what? After all these years of the folks on Wall Street hating annuities, apparently they all of a sudden love them, as evidenced by this recent article and some research done on the very topic of guaranteed income in retirement. And I love the title here. It came out of Investment News. This is something I discovered years ago, folks. This is not groundbreaking at Tony Walker Financial. But the article says, why retirees spend twice as much when they have guaranteed income, research finds. Notice it says guaranteed income sources like Social Security, pension, there's that word, annuities, those are the only 3 types of mailbox money, gives people, they use the word license, I like to say, gives people permission to spend and enjoy their money, which is the whole point, folks, of retirement. I mean, why in the world have you worked so hard to save the money if you don't have a game plan in place to spend it? Let's go to the next part of this article that's really interesting. It says the reason is that people think about guaranteed income sources differently than savings. Now, this is true, and I saw this play out with my granddad years ago when he elected his pension from Bell South. The reason he didn't worry about spending money is because even if he spent it that next month, the next mailbox money check came in the mail. He knew he could not outspend or outlive his money. This is a key point with annuities. Look what else it says. I love this. This is probably the most important reason to consider allocating some of your money to lifetime income. What are they talking about? That's right, annuities, all right? Then it goes on to say having more of your wealth that is protected or guaranteed for life. What's that? Yep, more talk about annuities. Again, folks, they really hate to admit this, but this is all about annuities. Will lead to an environment where someone is more likely to enjoy their savings versus one big pot of money, as opposed to the big pot of money most people have always used for retirement, having it all at risk in the stock market. One more key point, we may even have a couple Derek's blowing through these. This is a great article. A factor that makes spending from savings difficult is what? Fear of the unknown. Folks, the stock market, as much as I love to have some of our clients' money in the stock market,
You can't, if you're a saver, have all your money in the market in retirement. It's too much of an unknown. And as far as I can tell, most people don't want to go through another downturn and have to go back to work. Again, when you're in retirement, you have to look at money totally different. Principal protection has to be a key player in the game. Look at this. It's really hard to know how much you can spend from a portfolio. What they're saying here is, let's say you have $500,000 and that thing's bouncing all over the place. You are not going to give yourself permission to spend the money because you don't know how much it's going to be there next week, next month, next year, and whether it's going to run out. So yes, what happens is if you leave your money in the stock market and you're a saver, you will be afraid to spend your money. I learned this over the years, and it is a truism. Next point, your goal, I like this, is not asset preservation. If the client wants to live better, your goal is to create a plan that helps them live a better lifestyle. This is what I wrote about in the recent book, Live Well, Die Broke, folks. The goal is to use and enjoy this money before it's too late. The only way you can comfortably do that and sleep better at night, something we call
Sleep insurance,
is to have some of your money in place with annuities. And finally, I'm going to close out with this one. Don't consider guaranteed income. What's that? That's obviously annuities. Options for clients. They need to think about having all their expenses covered by an annuity. Now, I may or may not agree with this, but what they're saying is have at least a guaranteed income coming in from annuities, not a bad idea, to at least cover your fixed expenses. Okay, going to take a quick break here, but when I come back, we're going to talk about the 4 places you can invest your money and how unusual we are at Tony Walker Financial, how we use all 4 spaces in the environment of investments. Got some good stuff coming your way. I'm Tony Walker. We'll be right back. Who can you trust? It's one of the most important decisions you'll have to make. Question is, are you ready? Well, we're here to help at Tony Walker Financial. You know, we care more about you than we do your money, and we have over 2,000 happy clients and an A+ rating with the Better Business Bureau to prove it. Rolling over a 401k, confused about Social Security, maybe you're afraid of running out of money. Learn how to use and enjoy and protect your hard-earned money. Log on now to TonyWalkerFinancial.com and let's get started. Did you realize that if you have more than $250,000 in retirement assets, the government could tax as much as 40% of it when you go to take it out? And with current tax rates set to expire in 2025, the taxes you will owe on your 401k could climb even higher. Don't wait until 2025 to see how much Uncle Sam will take of your money. Get a game plan by logging on to TonyWalkerFinancial.com. That's TonyWalkerFinancial.com. Welcome back to the Worry-Free Retirement. Tony Walker here on this beautiful Tuesday morning, July 9th, 2024, as we record this episode of the Worry-Free Retirement. And we're talking about this idea of why Wall Street used to hate annuities, but why all of a sudden they tend to love them. And referenced in this was an article dealing with the fact that research, whoever these researchers are, something we've known for years, has all of a sudden uncovered this particular fact about savers. Listen closely. Since we know that annuities are the only guaranteed income source that's available, other than pensions and Social Security, they've noticed that as people have more mailbox money, they have permission, as I like to say, they have permission to spend more of their money. Now, why would they feel like they can spend more money now versus later? Because they know with mailbox money, they're not going to run out of money. And that is not opinion, folks. That isn't a fact. We are talking a lot about opinions here, and we have to admit that all of us in the financial world base our opinions on experience, emotions, how our clients' money turns out, how we've been trained. All of those things build into those opinions. And of course, I'm sharing my opinions on things today. But the one thing that is a fact today is that annuities are the only source of guaranteed income. Now, I want to go to something. We've covered this before. It's called the 4 different financial worlds out there. And these are the main places, for most consumers anyway, where you have to make a decision on putting your money with them. So let's go over the 4 financial institutions. I'm going to explain where I'm going with this and how it relates to the guaranteed lifetime income. Well, first of all, we have banks. Now, banks serve a wonderful purpose in our society, and banks provide as their main products for retirement for these savers that we work with. would either be savings, CDs, or money market accounts. Again, their goal is principal protection with a reasonable amount of interest, and as again we record this show in 2024, paying a decent amount of interest. Now what's interesting about that, through our Charles Schwab platform, we can find for our clients bank CDs and bank money markets. We can offer these products for a fee. We cover this and do this for people all the time. So we know, we have a working knowledge of bank products. The next product that you might get, obviously these products come from Wall Street. These would be certain types of bonds. These would be stocks, mutual funds, ETFs. Again, what's highly unusual about Tony Walker Financial, in our opinion, there are times when we will use these products from Wall Street. Folks, we don't hate Wall Street. Some of you might think I do because I'm always kind of giving them a rough time. The only thing that bugs me about Wall Street is why they won't admit that products all fit the bill for different people. This is why we offer so many different types of products at Tony Walker Financial. We know not everybody's alike. So yes, we can get through Charles Schwab stocks, bonds, mutual funds, and ETFs and long-term bonds. The third institution, this might surprise you, is the government. And you say, well, what do you get from the government? Folks, government bonds, which we highly recommend for savers, those are obviously issued and backed by the full faith and credit of the government. The government, while they're not paying huge interest rates right now, a lot of people still like government bonds because of their safety and security. And yes, through Tony Walker Financial, through our Charles Schwab platform, we buy a lot of government bonds for our clients. So you see where I'm going with this. What we're saying is, folks, there is no perfect product. All these products can fit, assuming you have a well-managed and well-orchestrated game plan, which is what we provide our clients. And finally, let's spend a little time on this, insurance companies. So another reason Wall Street has never really liked annuities is because annuities are not issued by Wall Street. They're issued by insurance companies. These are contracts. And up until recently, insurance companies did not offer products that were fee-based. In other words, if you sold an annuity, which we sell annuities, generally they've always paid traditionally to the agent, that would be us in this case, if you bought an annuity through us, the insurance company would pay our commission. Now the reason Wall Street doesn't like that, they don't mind taking a commission, but if they take a one-time commission, they're one and done. They don't get to have recurring fees coming in off that annuity. Now that annuities are fee-based, and they figured out how Wall Street can come in and charge annual fees, this is one of the reasons, in my humble opinion, that Wall Street is pushing annuities. Number one, they're losing a lot of money to insurance companies. They don't like that. And number two, they couldn't figure out how to charge recurring fees on annuities, which now they can. So you might be saying, well, what's the point of all this, Tony? The point is, folks, in our opinion, any of these products, or possibly all of these products, could be beneficial to you. But the only way we're going to know if we can find out is we got to talk. And we made this so easy, we call it the free 10-minute fiduciary phone call to talk with me personally about your situation to see what might be right for you. If you're retired or retiring soon, let's talk. Just log on to TonyWalkerFinancial.com. That's TonyWalkerFinancial.com. Click on that Let's Get Started, or if the internet's not your thing, call us anytime, toll free at 877-499-9255. So, by the way, what does the Bible have to say about opinions and people doing a 180 on an opinion and changing their mind on something? Some good stuff coming your way. Let me get a cup of coffee. We're going to be talking about the Bible. I'll be right back.
Hi, I'm Bob Graves.
And I'm Marge Graves, and we live in Louisville, Kentucky.
Well, I retired in 2008. Marge retired in,
2007.
So we've been retired for quite a while now.
And we like it.
Yeah, we enjoy it.
When we first met with Tony, we brought in all of our financial information. And he took a couple of days to look through it and gave us solid advice on where we were, where we would probably be in the future, recommendations that we would have. We
opened up our financial books to Tony, and he went through everything very thorough and came up with a game plan that we still adhere to. I think the game plan is the key. If in life you need a game plan, and definitely in retirement. So
So, Heather, speak to the flexibility of this concept we created years ago called the split IRA concept that we use within the Worry-Free Retirement, and maybe some of the advantages and uses that people will have as they meet the changes that are going to come their way in retirement.
Well, the split IRA concept really boils down to flexibility. So, and our clients, once they are implemented a plan, they typically understand that. You know, having the brokerage account through our Charles Schwab platform allows them for immediate income, and usually the ability to have a contingency fund or an emergency fund. We always see air conditioners go out, or people need to replace vehicles, things like that. And to have that pot of money available to them, and then they know on the back end, we've got the annuity backing them up for their lifetime income or mailbox money.
I had a couple in yesterday that are thinking about doing business with us, have a lot of assets. And I think they've watched our show for years. They know how much we do in annuities. And I was trying to help them understand the Schwab platform. And they kept asking the same thing. Okay, but what if I need $50,000? Can I get my money? Yeah. And I think they were going to the thought of, well, I thought some of these annuities are hard to get money out of. And they didn't realize, like you said, the flexibility of that Schwab platform. And we can get them money anytime we want.
Oh, I had a client call in yesterday and they're like, my AC's gone out. And I said, well, I'm so sorry first. But then he was worried. He's like, but I'm taking income from my Schwab account now. Is that okay? And I said, it's absolutely okay. We can send you some more money. I said, now, if it becomes a lot of money, we may have to move the projection up to start your income earlier from your annuity, but it's always out there for you.
Our topic today deals with how a huge group of people in the financial world, mainly represented by Wall Street, can have a dogmatic opinion of hatred toward a product called an annuity. Then, after some sort of revelation about the truth of these products, mainly that annuities, through guaranteed lifetime income, allow savers to freely have permission, as I like to put it, to spend more of their money now versus later, something I have been saying for years but kind of been bashed over. So how can they suddenly change their opinions by doing a 180 and saying they all of a sudden love these products called annuities? Truth will do that, It will take the most dogmatic of our opinions and turn those opinions on their proverbial heads. It happens today, and it happened some 2,000 years ago to an opinionated religious leader by the name of Saul. Check it out. We're in Acts 8:3. Saul, who would later become the Apostle Paul, expresses his anger over those with differing opinions than his by literally going into the homes of these newborn Christians and throwing them in prison for their beliefs. Yet, after a time of persecuting the followers of Jesus Christ, an interesting exchange of opinion takes place in the heart of Saul as he is traveling on the road to Damascus. Paul is suddenly blinded by the light of God as God opens Paul's eyes to the truth of who God really is and why Paul's opinions are exposing the worst truth of all, that Paul hates God. You might be saying, well, wait a minute, Tony. Acts 9:4 doesn't say that. It says, why are you persecuting me? Well, let me explain my opinion on this verse and why I substitute the word hate for the word persecute. I'll do this by looking at this love-hate relationship as explained by Jesus in Matthew 6:24, where he reminds us that we cannot love both God and be in love with our opinions, because here's what will eventually happen. We will hold to the one, which is what Paul did with his hatred of Christians, and also we could despise the other, which is why God called him out on the road to Damascus. Paul didn't hate the Christians who were following God, he hated God. But in only the way God's grace can come to the rescue, lucky for Paul, God's Spirit converted those dogmatic opinions, with Paul now doing a 180 and exalting the very God he once hated. Interesting that Paul, who would soon become an apostle of the Lord Jesus, would later share the wisdom of our opinions on the matter of life and death, and yes, even our beliefs in God, where in Romans 14:22 he says the following, "The faith you have as your own. Have as your own conviction before God." He goes on to say, happy is the one who does not condemn himself in what he approves. Or as goal-setting guru Brian Tracy once suggested when we're in the throes of our dogmatic opinions, quit taking yourself so seriously because nobody else is either. Remember, dogmatic opinions can lead to actions and words that harm others and, worse yet, sometimes expose our hatred towards God. In my humble opinion, we who claim to be followers of Christ must constantly guard against our strong opinions for fear that they not only might one day change, but that God will step in and change them for us. Believe in your opinions and be steadfast about them? Well, sure, but be careful in how you share those opinions with others and the possible negative impact it can have on them. My thoughts: what others accept to believe or not to believe is not our problem. We can only share in good faith what we truly believe is best for others and let it go from there. My strong opinions shared on this show each week are based on a vast experience of the field of finance and borne out in meeting with nearly 20,000 savers. But listen, folks, even with all of my experience, my opinions are still just that. They are opinions. And what I share for one person may be perfect, but what another hears from me may not be the best advice for them. Of this danger of being too dogmatic in our opinions and getting upset with others who might disagree with them, the late great theologian Charles Spurgeon had this to say. He said, "My mission in life is not to convert men to my opinions, but merely to share my observations about them." I couldn't agree more. And so, Christian, you want to be at peace with God, be convicted in the faith you have, and be careful on sharing your dogmatic opinions with others, and maybe sometimes keep your opinions to yourself, for fear that you too might one day have to do a 180 and change them. Better to sometimes keep our mouths shut and not look intelligent versus opening our mouths and looking like a fool. Amen? Well, how about you? Has this show today in the least bit changed your opinion about these products known as annuities? By stating a fact that we have known for years that annuities are the only financial tool that can guarantee you won't run out of money. The annuities, those are the tool, the same tool that Granddad enjoyed with what's called a pension, something he called
mailbox money.
So that's you right now. If you're looking for someone you can trust, someone you can just sit down, share your finances with, who's going to be upfront and honest with you, if you're a saver and you're retired or looking to retire in the next several years, we need to talk. And we've made this so easy. In fact, we call it the free 10-minute fiduciary phone call. And here's how you and I can talk by phone to learn more about your situation. First, you can log on to TonyWalkerFinancial.com, and you're just going to click on that little Let's Get Started button. That information will be confidentially sent to our offices, and we will arrange that phone call. Internet not your thing? No problem. Just give us a call anytime at 877-499-9255. Well, we hope you've enjoyed today's program. We've enjoyed being with you, but you remember, between now and next week, if all else fails, you be worry-free and make it a good one.